Good afternoon, everybody. Well, at least if you are a bear. My name is Joseph Cusick with the Cusick Group Securities offered by Money Block, and this is the closing bell here at MarketStream.live. It is May 17th, and finally, we start to get some action in this market. It has been a grind, and I'm just going to let this visual sink in for a little bit, because this has been the market. It's been a grind for basically the last month. There's been nothing but a churn, and the bottom line is that why these headlines are taking on this much of a reaction to the market is something that, again, you just can't time, you can't guess, you can't anticipate. But what you can do is you can utilize the resources that we point out here with the charts, the option analysis, and the different strategic approaches so that you can take advantage and mitigate these kind of moves, especially mitigate if you were not anticipating that they were going to potentially happen. So with that being said, let's take a look and wrap up today's action. The Dow Jones finished down 1.78%. That's good for 372 points to the downside. That's the biggest move that we've seen in almost a year, basically since September of last year. Dow's trading at 20,606. Bulls are losing the battle. Like I said, this is the battleground, the 20 and 50-day moving average, that green line and that red line. If I make this a little bit bigger, you're going to see it right here. This is the area that I wanted to watch this battle. It was straddling that 20-day moving average, that green line, and it just could not keep it up today. And it broke not only the 20 but the 50-day. So now you're in this no man's land, and this is where the trade gets a little dicey. What I would like to see tomorrow is get a little bit of an up opening, maybe even challenge that 20,800 level. Not to say that it's going to retrace all 300 points, but let's say you get 100, 125 points back, then you're going to get some two-sided trade. You might see a little more volatility. That's where opportunity starts to arise. If you're bullish, that's where you have to take your emotions and park them for a minute and think about strategically where do you want to start adding to a position on any pullback. Or if you want to start doing overlay strategies like writing calls against either specific names like the Apples, the Ciscos, the Oracles, the GMs, the Fords, whatever it is that you have in your portfolio, you start selling calls against them if you have 100 or greater shares. Otherwise, you're looking at layering in maybe some cash secured puts at lower levels. If you want to start getting along the Dow, you look at the next support level, 20,400. So you start looking at maybe the diamonds at 204, 203, and selling some out of the money puts to potentially grab some exposure. So if you sell the 204 puts for $1, your cost basis is 203. It's $1 less than what you sold those puts. That's why you're watching this show, because if you were doing what I was actually talking about, selling premium against your holdings, optimizing your portfolio, mitigating that standard deviation of risk, all this vernacular that none of you really get. But the bottom line is you would have been adding yield offsets to pullbacks like this if you were a bull. If you're a bear, you took advantage of high probability setups that had a decent payout, not the greatest payout because vol was low, but a decent payout. And more importantly, it had a higher probability of success than just outright going long or short the market. So with the Dow trading at now below its 20-day and 50-day moving average, the bulls, they're on their heels. Tomorrow's action is going to be watched and scrutinized, and it should, because right now, if there is a continuation to the downside, that's going to ring a lot of bells. You're going to see the chutes open up, and then you could see some more selling. Taking a look at the S&P 500, again, finished under its 20 and 50-day moving average. I do not like that action in the S&Ps. You're starting to see that finance is weighing on this particular index as well. It's about 25% of the S&Ps. Finance took a hit today. As a matter of fact, if you take a look at XLF, that's the ETF that tracks finance. It was in a battle anyways, right? It was straddling that 20 and 50-day moving average right here. And so the bottom line is that battle now is being won by the bears. Finance is on its heels, and if you can't get tax reform through this year, you're going to see that finance is going to start challenging that 22 to 21 level pretty quickly. You're going to see it right here. We're only 2 points away from challenging 21. That could be a significant move and a significant move in an offensive sector, finance, that we need if we're going to have any type of catalyst to the upside. One area of the market that has been basically carrying the whole market on its back has been tech. Whether it's semiconductors, large cap tech like Apple, Facebook, Google, or semiconductors like Nvidia, they've all been carrying this market to the upside, and they have been the catalyst. Well, today, huge pullback, down 2.5%. This is one of the biggest pullbacks, but not the biggest pullback in the market today. The NASDAQ, the NDX, which is the NASDAQ 100, down 143 points, good for 2.5% to the downside at 55.80. It has now broken its 20-day moving average. It hasn't done that in over 2 months. We haven't seen that basically since mid-April, almost the same time as 2 months exactly to the day. What did also take a hit, and this was the worst performing index, was the Russell 2000. The small cap index got pounded, down 2.78%, and not unexpected. If you don't see tax reform in 2017, the small caps and the growth component of the domestic agenda, it's going to be shut down for all intent and purposes. This is going to put a ton of pressure economically here in the States. It's going to put a ton of pressure on small businesses, regional banks, things of that nature, because there's going to be uncertainty about where the growth is going to come from unless we start getting these policies through. And with this rift right now in the political situation here, it is uncertain to say the least. The dollar got pounded as well today. You can clearly see that the dollar broke that 98 level, trading at 97.45. As a matter of fact, if I take a look at this, we haven't traded this low since last year in October. In November, excuse me. So we haven't seen these levels since late October, early November in the dollar. This dollar weakness is going to put pressure on these markets, especially anybody that is a net exporter here that makes and manufactures products and exports these internationally. That's going to put that could be a net positive for importers. This could potentially put the consumer on the sideline if their buying power is in jeopardy. And we saw that XRT, as a matter of fact, you could have gotten in front of this. You saw that retail was actually underperforming this market pretty dramatically. And you started to see that ramp up over the last 3 sessions. It was challenging its 200-day moving average, but the bulls had taken control. Then the last 3 sessions, even before these headlines came out, but we had some mixed earnings out of some retailers. And we actually got some good earnings. Target, Macy's, some good earnings, but bottom line is retail got smacked. Now you're seeing why. Weak dollar and the fact that we're not going to get these policies put through at the pace that we were expecting. The market did not like that. The dollar is getting whacked. That did take a little bit of pressure off of crude. Crude bounced back up 35 cents above that $49 level. The EIA report came out. There was a slight draw of 1.7 million barrels. So that was positive somewhat for the bulls. Not as big as the draw last week, and it wasn't as small as what we saw from the API last night, but the draw was a draw. And we want to see those continue if the bulls are going to have any type of legs in the crude contract, but the weak dollar has helped that. The Brent contract, which is out of the Middle East, primarily in Russia, that contract could not hold up. We're going to watch to see this get a little more volatile. Even though they telegraphed the fact that they, in advance of their May 25th meeting, that they are most likely going to extend the production cuts for Brent, who knows with that group, especially if there's any kind of turmoil, both geopolitically and economically. They could turn those pumps on, get as much out at this price level before it drops because there's uncertainty about growth. Speaking of growth, one of the measuring sticks that you look at is the bonds. And the bonds on this news were up big. The 2-year, the 10-year, and the 30-year were all up real big today. As a matter of fact, taking a look at the 2-year yield, which moves inversely to the price of the bonds, the 10-year yield went to 2.22. Folks, we were talking about the 10-year yield 4 days ago at 2.4%. All right, it just dropped 0.2%. That's huge in 4 days. The drop today went from 232 to 222. This is a big drop. Losing 3% on the bonds, this is a big dip. And getting it now in that 220 range, if you get it much below, and if it challenges that 220 range to the 216 range, you're seeing a lot of uncertainty come into the overall markets, and the safety trade is back on. That would be a negative for equities and really would start to put a big red flag up in the markets. So we're going to watch all of this action overnight. We're going to see how the Asian markets open up. We will be online at 7:45 tomorrow morning at MarketStream.live. But I want to tell everyone this. When you have this type of transparency, go back and watch Tech Talk. I went over all the estimated moves for the next 2 and 9 days for the S&P 500, the NASDAQ, the Russell 2000, the VIX, and the bonds. And I give you clear ranges that we're looking at based on what the options are pricing in for potential movement in these underlying index ETFs. This will give you the ability to start putting some context on whether or not you need to trim some of your portfolio, put some protection on, and then see how's the optimal ranges of where you should start implementing some of that. And so stay tuned. We will be back on tomorrow morning. And always feel free to either go to MarketStream.live and see some of our archives, or go to our Facebook page at MarketStream on Facebook.com. Check it out. All right, folks, that's it right now for the closing bell. Have a wonderful evening. Keep your powder dry. Keep your emotions in check. And join us here at MarketStream.live. See you tomorrow.